Go out to the local market. It closed in record territory again today. The all-share ending the day in the red, but overall, quite a good showing. Trading slowly starts to resume following that New Year break. I want to bring in market analyst Preston Narainsamy just for a look at what's been happening on the markets as we really start now getting into the action economically. And as I said, as we get into the workings of the new year, Preston, I suppose it was not a bad year at all for the JSE all-share, at least last year. You look at the numbers, I think we were about 30% on a good return for the all-share last year. That's not a bad showing if you invested on the JSE.
Yeah, Devan, it's actually been an incredible year for risk assets in general, and the JSE, benefiting from what was really a broad-based recovery. And, Devan, that number, that 30% that you mentioned, a stellar return. And what's a little bit more impressive is that, if you look at two constituents within the all-share index, both NASPERS and PROCES, those constituents make up about 30% of the index, and those shares were down 25% each last year. So it just goes to show how well the other constituents within the All-Z actually did. And what we saw was a stellar outcome, 29%. And Devan, it wasn't just equities, property, preference shares. If you look at the indices on those, they finished up more than 40%. Mm-hmm. And, what really shot the lights out, Devan, was, some of the small cap and leisure stocks, which really bore the brunt of COVID. Those shares, some of them, finished, doubled in value, and, some of them even trebled in value. So it's actually, a really solid year. I don't think investors have much to complain about, Devan.
Yet on the flip side, Preston, delisting from the JSE, that gained a bit of traction last year, didn't it? I mean, on average, Bloomberg telling us that companies were delisting, about 14 a year on average from the JSE in recent years. So what do we read into this? How do you see this?
Devan, it's a little bit disappointing. Over the last 2 years, I think we're close to 40 companies in total that have delisted just in the last 2 years. And, these are small cap companies. Of course, it's very onerous for these companies to be on the JSE from a cost perspective. And, the sad part, Devan, is, these are usually good companies, but they kind of get lost in the JSE, given, some of the more established players. And, Devan, these companies, a lot of them, they trade at, huge mispricings, 3, 4, 5 times price to earnings ratios, 50 to 70% discounts to their underlying asset values. So foreign investors look, at these companies, private equity firms, both locally and offshore, they look at them and they say, sure, this is huge value here. And as a result, we've seen quite a lot of them getting scooped off our market. In fact, Devan, a lot of companies on the JSE are presently trading under cautionaries. Even just today, the likes of Hulaman, they've just come out with a renewed cautionary update. So the aluminium manufacturer, just stating to shareholders that there's a potential event that could happen that could materially impact the share price. So a little bit disappointing to see some, good companies. They're just small cap companies, but it's just a little bit sad to see more and more of them just leave our market each and every year.
The reason I put that question over to you, because there was some fear about the fact that the local economy is just not playing up the game, and perhaps the fact that companies are leaving our local JSE is a sign of the fact that the future doesn't look great for the economy. Is there any truth in that?
I think there is some element of truth to that, Devan. I think a lot of investors as well, they're more comfortable to deploy, even companies locally, they're more comfortable to, deploy capital offshore as opposed to locally. We've got fiscal pressures here. There's still concerns as to whether, we could end up in a debt trap. There's some real concerns from a policy perspective, implementation perspective, structural reforms. And I guess until we get clarity on those fronts, Devan, I think investors are always going to be skeptical looking at our market.
All right, just very quickly before I let you go, two big factors, the rand and the oil price, that affects your pocket and mine quite directly when it comes to inflation. I see the rand doing not so great on the day, but we're well below 16 rand to the US dollar. The oil price is down as well. What does the year look like for you very quickly, because those are two inflation factors, aren't they?
Yeah, so Devan, the rand's trading at around its fair value range. If you look at purchasing power parity (PPP), but yeah, the rand's strength, the recent strength, it's primarily attributable to two factors. I'd say the one is coming from December, we were on travel ban lists. On the back of Omicron, and we've now been removed from some of these red lists, and that saw the rand re-rate quite a bit toward the tail end of last year. And Devan, last week we had a little bit of a disappointment from US jobs numbers, and as a result we did see the dollar weaken quite a bit. And on the back of that, that's translated into rand strength. I hope we keep the momentum going here. I'd like to see the rand, much more stronger. But Devan, at the end of the day, currency markets are very volatile, particularly a commodity currency like the rand. So very difficult to predict from a short-term perspective. But we just hope that the traction keeps. We keep that existing traction. From an oil price perspective, we had quite a good week last year. I mean, in terms of the oil price, up 5%. Sasol's benefited on the back of that. There were quite a lot of outages and supply disruptions from the likes of Libya, and that's resulted in the oil price coming under some coming under some pressure in the prior week. But it seems to have steadied for now, Devan, and I think it's going to maintain this momentum going forward. So I think oil, we're still bullish on where the oil price could go. A lot of companies or a lot of investment houses are calling the oil price at $85-90 to the barrel by the end of this year. So we'll wait to see where that heads. Again, with OPEC and Russia, it's very hard to predict what they could do, closing and opening the taps. But yeah, we oil's had a good run so far. And it'll be interesting to see how the next couple of weeks develop.
All right. Thanks very much indeed. Preston Narainsamy from the Nedbank Private Wealth Group. Thanks indeed for your time. Let's